Welcome back to Chat with Disa, guys, and I've been meaning to talk about the tax-free savings account, the tax-free investment account, because honestly, this is a great financial tool for your future, for your children's future, for your family's future, for your relatives' future, for everyone essentially. But we have to first understand what a tax-free savings account is. We have to understand how is it different from your normal savings account. And I can understand that, when you look at some of the tax-free savings accounts that are out there, it's very easy for one to think, well, what's the big deal about tax-free savings accounts? What really makes this one so different? Why should I get one? So today that's what we're going to be comparing. We're going to be comparing your normal savings account that you might have with your bank and a tax-free savings account and tax-free investment account, because I personally believe that there is a difference, and a lot of people will also agree that there's a huge difference between a tax-free savings account and a tax-free investment account, as well as those two accounts as opposed to your normal everyday savings account that you might have. So this is Chat with Disa, and let's get talking about the money. So, before we start talking about the tax-free savings accounts, I need to say this. I am not a financial advisor. I'm not a registered financial advisor, and anything that I say should not constitute as financial advice. I am not telling you what to go and do with your money or your investments. I am not giving you advice. This is my personal opinion based on what I have read and based on my understanding. I will also add links in the description box to show you where I got this information and how I came to understand it in this way. Please do your own research. And if you feel that you're still confused and you're still like, I can't really do this, I'm not really sure, please contact a financial advisor. It is highly, highly encouraged. And if you have any questions that you want us to maybe discuss even further, please leave them in the comment section. I really want this to be an interactive conversation between you and I, where you leave your comments, and when I get to the end of the tax-free savings and tax-free investment series, we can then do a Q&A that will sum up all those gray areas and will make them clear, So please do comment, like, subscribe, and share the video with friends and family. It could help someone out there. Right, let's get right into it. What makes the tax-free savings account so different to your normal everyday savings account that you would open with your bank, whether it be a fixed term notice account where maybe you save your money for 6 months and you can only take it out after 6 months, and if you take it out anything sooner than that, then there's a penalty involved, or one where you have to give 32 days of notice in order for you to have access to your money, and once again, if you take it out anything sooner than that, there's a penalty that you would pay with your bank, right? Those savings accounts have a set interest rate, right? There's an interest rate that the bank, depending on who you bank with, they will say, okay, on this account, we're going to give you 5% interest if you keep the money for this period, or 7% interest, or whatever. I'm sure all of you are familiar with that. And I did record a video where I was talking about having sub-savings accounts and having specific reasons for why you are saving that money. So whether it be for medical, whether it be for birthday parties, whether it be for schooling, whatever it is that you're saving for, and you can watch that video later and see what I was talking about. So that's your normal regular savings account. Now, a tax-free savings account should not be treated the same way that you treat those accounts. And it's unfortunate that in the way that it is marketed, this is my opinion, in the way that it is marketed, it almost seems like any other savings account that you would have. And I think that is just purely wrong, and it does an injustice to South Africans or any other country that has tax-free savings accounts. But I'm going to speak about South Africa, right? So National Treasury was like, you know what, South Africans, you're not saving, hey? You're not saving for your financial future. You're not, by the time you guys are going to retire, you're not going to have enough money to take care of yourselves. You are struggling when it comes to finances. So they were like, you know what? Let's give South Africans a gift. Let's say, you know what? Here is this account where you can save tax-free. So your normal savings accounts, those ones, you pay tax on it, but you only pay tax when you have earned an interest that is higher than 23,800. So if you make anything more than 23,800, SARS wants a piece of that. So you invest an amount, and that amount grows, and the interest that you earn on it in a tax year is above 23,800. SARS is gonna want some money. But with a tax-free savings account, you don't have to pay any tax. And also, if you are investing, if you have any sort of investment accounts, from the moment you start investing, there are tax implications. There's interest, tax on interest. There's dividend withholding tax. There's I don't know how many different kinds of taxes that are involved when you are investing. And some of it, you don't even see the deduction being made because SARS wants its money before you can have access to that money, because they know that maybe they might not get their money from you if they wait for you to bring it, whatever. So when it comes to a tax-free savings account, all of those fees when it comes to taxes, zero. Like the name says, tax-free. You don't pay tax, right? So maybe some of you are like, yeah, but I've never paid tax on my savings accounts. I've never felt tax on my savings accounts. Well, maybe that's because, like me, you have never earned interest that exceeds 23,800 in your normal savings accounts, right? Fine, you've never seen that. So you're thinking, then what's the use here? What's the use now? Why must I go have a tax-free savings account if value when I save, I never really make interest that exceeds that amount for me to benefit from this tax-free element, right? Now, if you have your tax-free savings account with certain providers, right? With certain providers, you will see that your tax-free savings account will sort of almost look like any other normal fixed deposit account, any other normal 32-day notice account, because of the type of interest that they are giving you. They're saying, we're going to give you this interest rate, nominal interest. Remember Kometlet when we did nominal interest, compound interest, hada. So some of the financial institutions or financial services providers that offer tax-free savings accounts are really offering it at a crappy rate, if I should say it like that, because then you literally like, okay, this makes no difference between the normal savings account that I have anyway. So now this is where I say there's a difference between a tax-free savings account and a tax-free investment account. If you have a tax-free savings account, in my opinion, and a lot of people might agree with this, is that it's like you're saying to the bank, here's my money, take care of it, and while you're taking care of it, you can give me some interest. And they saying this is the interest, or this is how much your money can grow by. Whereas if you are investing, you're saying that I am willing to take a bit of risk in order to see my money grow. But in taking that risk, you need to understand that things will go up and up and down, right? And sometimes it will just be steady, but you need to be patient, right? So I used to have my tax-free savings account with Old Mutual. That's a fact. I'm going to name them because that's a fact. I had it with Old Mutual. I had a tax-free savings account with Old Mutual in 2016, and I cashed out on that tax-free savings account in 2019. So 2016, 2017, 2018, 2019, right? Like 2 years and a half or so with Old Mutual. And I only made one contribution to that account. So at the time, tax-free savings accounts, you could only invest 33,000 per tax year, not January to December, tax year, which is March to February, right? So luckily, I had only made one contribution to that tax-free savings account with Old Mutual. Every single time I needed to contribute more, I don't know why I became skeptical, and I was like, I think I was skeptical because I knew that my tax-free savings account was not growing. I used to look at it every day, every month, every year, and I'm like, this is all the growth I'm seeing, like a few $100, just this. I mean, I have other savings accounts that perform better than this. What's the use of having this? So hence I was like, why should I contribute to this one? So I needed the money. Something happened and I really needed the money from my tax-free savings account. And I needed it because I had exhausted my emergency fund. All the other accounts where I was saving for emergencies, saving for whatever it is that I was saving, I had exhausted that, and I really needed money from my tax-free savings account. So I withdrew that amount, and I regret doing that. I regret it. I withdrew that amount from Old Mutual, and guess how much I got from a person who invested 33,000? Guess how much I got? From that 33,000, I got 34,700 and something. So that means I only made like 1,700 and something in a space of 2.5 years of having it with Old Mutual. Fine. And then now this year, I was like, okay, I'm ready to start again with my tax-free savings account. I have a better understanding of it now. I really understand that this thing really needs to be for the long term, and it is important for me to be investing it in the right place. It must not look like a normal savings account. It must not perform like a normal savings account. No. It needs to perform the way that National Treasury had envisioned for South Africans to capitalize on like great interest when it comes to their tax-free savings accounts, right? So I went with EasyEquities and I deposited 36,000 for this tax year, and 36,000 because that's the new limit. So now you can deposit 36,000 into your tax-free savings account per tax year. Remember, not January to December, March to February, okay? So I've made the maximum contribution that I can make. I cannot make anything more than this. I can't. I'll be penalized, a hefty penalty, if I do that. Because if I do that, it's like, think about it. Rich people would literally just go and hide their money in tax-free savings accounts just to avoid tax, right? So hence there are those limits. So every month, I'm like looking at my tax-free savings account, tax-free investment account with EasyEquities, and I'm like, what's going on? Is this how it's supposed to grow? You know, I got excited. I was like, wait, when I had it with Old Mutual, I was like, yeah, one day I see 10 Rand, next day I see 100 Rand, then it goes down, then, you know, and then now that I had it with EasyEquities, I was seeing more green than red. And now this is where it stands. Remember, I only reinvested into my tax-free savings account. Tax-free, I gotta get used to saying tax-free investment. I've now reinvested my money into a tax-free investment account, but with EasyEquities. And this is the type of growth that I'm seeing on my account. And it's only been 7 months. This is a lot more than what I received or made from having my tax-free savings account with Old Mutual. So I'm like, guys, stop wasting time. Stop wasting time, hey? Like, look at the product that your bank is offering. Look at the interest. Are they saying, okay, we're going to calculate this at nominal interest rate of X amount for your tax-free savings account? And look, some banks actually do have tax-free investment products, right? So inquire about those. Inquire about where is the money being invested? What does that portfolio look like? How does it perform? What's been the performance of it? What's the percentage of its performance? Whatever the terms are. Just let them show you the numbers, you know? Don't let them just say, okay, this is a tax-free savings account. You want a tax-free savings account? Let's open one for you. Ask the questions about what's the expected annual growth, like based on that particular portfolio where your money is going to be invested. So if it's unit trusts, if it's ETFs and all of that, you need to be asking these questions. So with me, I like being in control because I do my own research. I'll read and read and read about something until I get it. So with EasyEquities, I put the money in there and then I was like, okay, the firecrackers, I did like, not firecrackers, but like I didn't, like what do I do? How do I invest this money now? I'm scared. I don't know what to pick. I don't know what to do. And finally, I decided, you know what? I'm going to start reading what is on their website about ETFs. Like, okay, there are ETFs that I can invest in, but I don't even know which ones to pick. Eventually decided on which ones to pick. I just distributed that 36,000 between all these ETFs. This one gets 30,000, this one gets 6,000, or this one gets 10 or 5. I just invested. And this is the result of it. But I understand that not everyone can do it this way. I understand that some people will be like, hey, this really gives me cold feet. I cannot do it this way. And you can have a financial advisor that can help you make the investment choice for your tax-free investment account. But be careful, guys. Don't choose tax-free savings accounts that honestly mimic your normal fixed deposit savings account. That's not gonna do much for you. So anyway, in the next video, we're going to be talking about what I have in my tax-free savings account that has seen this type of growth for me. I'm willing to show you guys what I've invested in, and I encourage you to really read up about ETFs. And in the next video, I can also tell you more about what ETFs are. And once again, I would like for us to close off the tax-free investment account, tax-free savings account conversation with a Q&A session. So any questions that you do have, please leave them in the comments section so that they can be featured in the next video. I really hope that this was informative, and stay tuned for the next part of the tax-free investment account series. Thank you for watching. Nakensa.